Welcome to Home Biz Tax Talk. My name is Lysandra Everett. I am the Home Biz Tax Lady, where I help home business owners win the tax game. Home Biz Tax Talk airs Monday through Friday, and when you tune into my show, you're going to hear about topics that are important to the home business community. Okay, so one of the things that I have noticed is this one easy thing that is being missed by taxpayers, and that is looking at your teenagers, okay? So this is a free tax planning tip. Understand that tax planning is a separate service than your tax preparation. So if you are not paying your tax professional for tax planning, then it is not their responsibility to necessarily tell you about your tax plan. That is something that you need to schedule and pay for as a different service. That's just an aside, so people really understand what tax professionals are supposed to do and not sitting up there being angry at their tax professional because they didn't tell them whatever. Okay, just know that it's a separate service. So with all the junk that's happening right about now with the whole coronavirus thing, I figure, you know what, you could probably use a tip right now. So one tip I tell you is to look at how old your teenagers are, because if your teenager is going to turn 17 in the next tax year, your tax bill is going to go up, meaning that they are going to age out of the child tax credit, that $2,000 tax credit that you may be getting for that teenager when they're 16. Once they hit 17, guess what? That $2,000 tax credit now becomes $500. Okay, so they're going to depreciate faster than a car as soon as they turn 17. So this is where you need to really do some forward planning for the next year if you have estimated tax payments or something like that, because your estimated tax payments are based on what your current year looks like. It's not taking into account necessarily any changes for the following year. So I'll use me as an example. My son will be aging out next year. So I had to adjust my estimated tax payments to cover that difference so that I don't get an underpayment penalty. And, also looking at your withholdings may contain that tax credit for children. If you've got more than one child under the age of 17, you might need to adjust your W-4 to cover that kid aging out, and you're not going to have that tax credit anymore. So this is one of those easy ones that is very easily missed. And, again, by missing that, you're missing a $1,500 change in your tax bill, because it's not that your taxes are going to go up, is that you're going to lose the tax credit. And understand that a credit is a dollar for dollar reduction of your tax bill. Okay, so if your tax bill is $18,000 and then if you get a tax credit for $2,000, well, then that takes your tax bill down to $16,000. So it's not the same as a deduction. A tax deduction works out to being a percentage, where a tax credit is a dollar for dollar reduction. Also understand that when they move into that other dependent credit, that $500 is a non-refundable tax credit. So if you don't have a tax bill and your kid ages out, then guess what? You don't get that $500 at all. It's a non-refundable tax credit. So just know that this is an easy thing for you to miss, and it's also an easy thing for you to catch. So that's your free tax tip for the day. Check out those teenagers. If they're a junior in high school or a sophomore in high school, depending on when they were born, you better be checking the math to see if they're going to go from being worth a $2,000 tax credit down to $500, and make some adjustments where necessary. Okay. So thank you guys so much for tuning in to Home Biz Tax Talk. Again, we air Monday through Friday, and you can come right here and get your questions answered about your home business taxes. All right. Have a great day, and I will see y'all next time. Bye.